As London swelters under the hottest day of the year, I'm going to bring you the Movers and Shakers show where I try and ascertain exactly what the hottest markets are right now and the coldest in a bid to try and see whether these trends are likely to continue into July or whether we're going to see reversals coming into play across the likes of the indices, the FX and the commodity space. So first and foremost, let's look at indices for June. And you can see that the winner here comes out of Japan with the Nikkei 225 gaining over 6%. We also saw the NASDAQ pushing over the 6% mark, followed by the likes of the Russell 2000, the S&P 500, a little bit behind that, the Dow Jones as industrial average as well, and the Hang Seng. So what's notable here in my mind is that we're seeing a reversal in terms of the trend, which saw a move out of US equities, US indices, and towards the likes of European markets in particular, but also Chinese markets. So Chinese stocks doing well still, as we can see with the proxy being provided by the Hang Seng. But on the European side, the DAX down for the month, the CAC, the IBEX, the Amsterdam stock market, the Euro stocks, FTSE 100, marginally in the green. But by and large, European markets didn't go anywhere. If anything, went lower. And we saw US markets really booming once again, being led by tech. And that's why we saw the NASDAQ doing so well. But as we can see here, it's the likes of the Nikkei 225 that actually led the way, with Japanese stocks coming into favor. Notably, the last trading day of the month, we saw it coming off. So is that indicative of that rally coming to an end, and we come into a sort of retracement phase, or are we going to continue to push onwards and upwards from here? On the bottom end, we can see the Swiss 20 down over 2%. So let's look into those two markets and see exactly where we go from here. So first and foremost, let's look at the Nikkei 225. So in terms of the wider trend, we're going to look, let's just get this line off here. We're looking at the monthly time frame. You can see very clearly we saw this sharp pullback in April over significant concerns around the tariffs, and we've been regaining ground since then. There's a lot of talk around a potential trade deal between the US and Japan, certainly the Japanese taking a somewhat different approach to the likes of the Chinese, and certainly trying to push for a deal. Now, as we move closer into the sort of shorter time frames, we can see here on the weekly time frame that we're into this sort of zone of resistance where we have the peak here from January 25, but also March 2024. So we are in a resistance zone. And like I said, we ended the month on the back foot, but then kicking off the new month, we're also maintaining that bearish trajectory. So if we're looking at sort of short-term price action, what we can see here is that we very clearly have this nice stepped move upwards here. So if we're looking at sort of swing lows, we're continuing to create higher lows. Now we can see that once again on the 4-hour time frame, and you can see here high, low, high, 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 low, high, 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 low, and then we see this big boom. And so that big boom could be indicative of a change of sort of momentum and a gathering of momentum, or it could be something that we sort of run ahead of ourselves a little bit. We don't necessarily know that we're going to come all the way back down to what was the previous trajectory. So we can sort of see here with trend lines sort of gathering this. So you can see the top end was on this kind of trajectory, the bottom end is on that kind of trajectory, and then suddenly we see a massive boom up through there. We're now seeing a pullback, and that pullback, there's a good chance, is a sort of sharper pullback than we might have seen in the past, right? So you see retracements, but because of the gains not necessarily being all too dramatic, the retracements are sort of gradual in nature. We see that retracement, then we see the next leg higher. Well, because we saw such a boom, it's often the case that the pullback also is sharper, and that appears to be the case. So we have a couple of possibilities here. Well, 3 possibilities. First and foremost, the possibility that this is a top and we're going to break all the way back down to 37960 and break below that. I don't necessarily think that is the case. I think it's likely that we're going to see a retracement coming into the fold here. And so it's a question mark of, do we see a retracement into trendline support here, or Fibonacci support? So let's get the fibs drawn on and see if that sort of tallies up with anything. So we can see the sort of 50% retracement coming in with that top end trend line. So that's a potential area of support, sort of 39400 kind of area. Below that, you've got the 76.4, which likely, if we got down towards that area, could tally up with the bottom end of the trend line. So certainly, I think it's it's going to be key to just follow things on an intraday basis. It's difficult for me to just say it's going to hit this trend line and rebound or that trend line and rebound. My only thing that I think with significant confidence is that, we are in a retracement phase. And so, look at some of the shorter term trend lines, shorter term trends. So the 15-minute chart, we've got a swing high, lower swing high. So when we start breaking through those levels, it tells us that perhaps this retracement phase is over. If we're looking in terms of the relationship between the Japanese yen and the likes of the Nikkei 225, you can have it on this perspective, and it doesn't really show you all that much. But when we look at it and inverse the likes of the Japanese yen, we can see that ultimately we do have a very clear relationship. And that essentially means when we have a strong yen, it's bad for Japanese exporters. It drives the likes of the Nikkei 225 lower, and in particular drives underperformance. When we see a lower yen, then it strengthens the likes of the Nikkei 225. And we've seen that historically, right? We've seen weakness for the yen over the years, and we've seen strength in terms of the Nikkei 225. And what's been happening recently is that we've seen some sort of chopping and changing of that trend. So if we look at the sort of near term, we can see exactly how that's playing out, right? So we see the upside move, so weakness in terms of the yen, strength in the Nikkei, strength in terms of the yen, weakness in terms of the Nikkei 225. So what we're seeing at the moment is strength in terms of the yen. Remember, I've inversed this, and we're starting to see the Nikkei 225 coming off. So if we continue to see strengthening in terms of the yen, then we're likely to see the Nikkei 225 pull back further. What might happen to strengthen the Japanese yen? Well, there's a number of things. But first and foremost, I would say that the likes of the US dollar isn't a great haven right now, because people just aren't buying it, right? So when markets roll over, we're not necessarily seeing particular strength in terms of the US dollar. Instead, we're seeing people move into the likes of the yen, the likes of the Swissy. So look out for potential strength in the yen if markets roll over, and that could prop up things somewhat in terms of the Nikkei 225. So I do ultimately think we're potentially going to see further downside over the near term, but I wouldn't be surprised to see this forming a retracement before the bulls get their teeth back into it once again. In terms of the Swiss, we can see a similar kind of trend, and that is that we've got this inverse correlation between the Swiss franc and the likes of the Swiss 20. If I sort of invert this as we did previously, you can see here the strength that we're seeing for the Swiss franc, which, because I've inverted this, you can see that as downside for the Swiss. This is essentially an index, so Swiss franc currency index, kind of like the dollar index. That's driving underperformance in terms of the Swiss index. So if we see a continuation of that, and certainly that is the trend at the moment for a strength of the Swissy, then it would provide the basis for potentially further downside to come for the Swiss index. From a wider perspective, you can see here that we're sort of, we do have a long-term bullish trend, but we've seen quite a lot of chop recently. The rally, sharp pullback, big rally, sharp pullback, rally back into this area of resistance around 124, and now pulling back once again. So we'll be looking around sort of 114, 116 as an area of potential support. But certainly the trend is bullish from a wider perspective. But we are within this sort of wide range here, where the sort of 130 or 13,000 top has been sort of providing resistance. So yes, at the moment, the pullback we're seeing at the moment could provide a buying opportunity, but not necessarily feeling all too confident in this as my sort of primary pick when it comes to being bullish for the indices space. So in terms of here we go. In terms of the FX space, we can see that the euro has done particularly well of late. And once again, it's the US dollar at the bottom of the pack. Now, what's notable here, if we look at the top three performers, what have they all got in common? Well, the euro, the Swiss, and the New Zealand have all seen significant rate cuts. The ECB now closing in on potentially at the end of their easing process. The Swiss pretty much are at that. They've cut rates that they're back down to zero. And the New Zealand dollar, well, the RBNZ have been ahead of the curve, certainly in comparison to the likes of the Federal Reserve, the likes of the Bank of England and the RBA. So what we're seeing here is the potential for weakness for those central banks that still have a lot to do. And those central banks that have already done a lot are now potentially shifting into a hawkish pivot and ending that easing process, and that relative relationship between rates then turns on its head. So if we're looking at, say, the euro against the US dollar, well, as the ECB essentially ends its easing, and as the Federal Reserve hopefully get over the tariff concerns, the inflation concerns, and ramp up the easing, that provides the basis for potentially further downside to come, in my mind, for the US dollar against the euro. So further upside for euro dollar. Let's jump back into the charts and we can see exactly how this is playing out. So this is the sort of daily time frame. Let's go on to the weekly. So the weekly time frame shows you we're at the highest level since 2021. The bullish trend continued to play out since those lows at the beginning of the year. From a monthly time frame, we can see that the long-term trend is bearish. You can see since the peaks here in 2008, we can see time and time again, we see lower highs playing out. And so the question mark here is, are we going to see that continue, or are we seeing a turnaround in that trend? Well, we've moved beyond the 76.4, which gives me greater confidence that we have seen a bottom and that we're going to see further upside to come. On the daily time frame, we can see here that we see these wider trends playing out. And at the moment, we're within this bullish phase. Are we going to see a retracement phase coming into play once again? Potentially, but it's all about trends within trends, right? So right now we're in this intraday trend, and you can see on the 4-hour time frame that we see sort of higher highs, higher lows, higher highs, higher lows. We might see a runaway rally, and then we come into a deeper sort of multi-staged retracement of the beginning of that rally, right? So now we've seen this relatively strong rally. The pullbacks are pretty short in nature. What do we see here? Well, for me, unless we see a breakdown out from this sort of hourly pullback, then the near-term retracement looks like exactly that. Short-term in nature and likely to see the bulls coming back into play unless we see a breakdown through, say, 117 or down below 1168, that kind of area. If we break through that area of support, then you look for the wider retracement to come into play. Then we'll be looking, let's say the retracement starts from here, because of course I don't know that this is the top to be drawing it from. Let's say we do break through that zone of support, then you'll be looking for the wider fibs to come into play. So these levels might or might not be relevant depending on whether the wider pullback starts here, because of course I might need to adjust it to where that does happen, but it will happen before long. And then you look at that wider retracement to come into play. Part of it's going to come down to exactly how things shake out from an inflation perspective, from a US employment perspective. So jobs report on Thursday, that's going to be key. But certainly if we do see the ramping up in rate cuts at the back end of this year, as is currently expected, once we see some of these tariff concerns and hurdles overcome, once we see the concerns around inflation overcome, if it turns out in the right direction, we could see a ramping up in terms of easing from the Federal Reserve. We could see the end of easing from the ECB, and therefore further upside coming into play for Eurodollar. But like I said, there's some uncertainty in there. We don't know if the inflation picture is going to remain subdued and under control. Certainly the Federal Reserve just this past week have been pointing towards the idea that that won't be the case, and they do expect inflation to rear its head. And then they have the question mark of whether it's just transitory and something they can overlook or not. And you don't necessarily know the direction of travel for the US economy either. So certainly there's plenty of question marks, but I think there's a good chance we do see further upside playing out from here. And finally, let's look into exactly how things are shaping up in the commodity space. Palladium and platinum back at the top once again. And you can see at the bottom, we're looking at the likes of natural gas. Natural gas, by and large, always at the top or the bottom. We just see major swings when it comes to sort of numbers and percentage moves in nat gas. But nonetheless, we'll talk about it this month. So platinum, there's a big story here, and there's question marks about, is this a precious metals move? Is this a case that this is the precious metal that is massively undervalued relative to the likes of gold, silver, and the like? There is that narrative. But there's also a narrative around the EV demand within the US and the move away from EV, with the tax credits essentially being removed by Donald Trump, notably sparking that sort of war of words between himself and Elon Musk. With the removal of tax credits for EVs, it points towards higher demand and a greater longevity for fossil fuel cars. It means catalytic converters are once again back in fashion. And so what does that benefit? Well, it benefits platinum and it benefits palladium, which have been hit hard over the years. So let's look at platinum. Let's look at nat gas and see exactly how things are shaping up. So in terms of the chart for platinum, this is the monthly time frame. So we can see we saw this collapse, and then we've just been essentially flatlining for many years, right? There hasn't been a sell-off beyond here, because I guess to an extent people think, there is still value in other elements of demand, but we have essentially taken much of the premium out in terms of the demand that we had seen historically via catalytic converters and the like. We still do have different sources of demand through jewelry and the like, but now we're seeing this massive spike, which comes off the back of the idea that maybe we're not going to see as quick a move away from cars that require catalytic converters. So the daily time frame looks like this. The question mark here is whether we're going to see a continuation. It's quite difficult to really know exactly where we're going to go with this because, yes, we've seen a sharp move higher and it's come into second month here, but I don't necessarily see a justification of a move back up to, where we were back in 2011, 2012. And so I think there's a good chance that somewhere around this area, we're going to see a top. Now, are we going to see this as a sort of fib retracement kind of move? Well, you can see we've hit the 61.8. So this zone between sort of 1400 to 1600 looks like the kind of area where we could top out. Have we topped out here? Well, I think it's just going to come down to following this on the shorter time frame and seeing exactly how this shapes out. So this is the 4-hour chart now, and we can see nice bullish trend. We're now moving into something that's a bit more choppy. So previously a lot more clean cut. Now we're seeing a little bit more of a choppy move. More recently, the latest sort of run up is this rally from the lows that we saw here at 1244. And then we've come into this 61.8 retracement of the rally up into that 1437. So if we break down through the 1244, it essentially means that run higher, in my mind, is over. But for the time being, we've retraced into a relatively deep retracement. We're now in this sort of holding position, right? We're sort of sideways in this zone here. So we've got this sort of zone around here, 1322 up to 1377. And we are tightening, to be fair. You could say, maybe this is a symmetrical triangle because we've now sort of seen marginal higher lows on the bottom end and certainly lower highs on the top end. So we're narrowing. People don't necessarily know whether we're going to break up, break down. So I've got greater sort of questions around this on exactly where it's going to go. And I think the short-term price action is going to inform me more than anything. I don't necessarily think there's justification for huge moves to continue upwards and rally up into previous highs or anything like that. But I don't necessarily know that this is the top. So it's really a case of following things on the short-term price action and seeing exactly how things are shaping up. Now, in terms of nat gas, we've seen, of course, significant volatility and spikes around the energy markets of late. Questions about a potential flare-up and a war in the Middle East. Then we've seen that allayed. And certainly that's helped fund or fuel a downside move of late as we saw some of those concerns around Iran easing. In terms of the wider trend, now look, we're seeing on, say, the monthly time frame, this run higher over the course of the second half of 2024. Now, more recently, we're sort of stuttering somewhat, and I do think there's a good chance that we do start to see the potential for a top, particularly if we see the Iran issue essentially overcome. We're seeing Donald Trump saying that he's really pushing hard for Israel to draw a line under the conflict in Gaza. And so if we see peace in the Middle East, that would be good for the flow of energy around the world. Higher flows of oil and gas means lower prices. And so that could put a lid on that gas prices from here onwards. This is the daily time frame. We can see that we've broken out from this trend of higher lows now with the move through 3514 and then the subsequent lower lows from there. So for me, I think there's a good chance that near-term upside is short-term in nature and that the bears come back into play. So the near-term swing high is 375. As long as we don't break through that level, near-term gains, in my mind, are likely to be sold into. But the caveat, of course, is there's always uncertainty and unpredictability and the possibility of a shock when it comes to the Middle East. And for all we know, we could see another strike from the US on nuclear facilities if Iran attempts to rebuild it. And so there's still, of course, the risk premium being built in. But bear in mind the flow of products through the Red Sea, the Straits of Hormuz, things like that comes down to relations in that region when it comes to Yemen, whenever it comes to Iran. And so the ability to end the war in Gaza, the ability to stop a war flaring up in Iran is good news for markets, but also bad news when it comes to prices for the likes of nat gas and energy. And so as we're heading in that direction, it points towards a possibility of further downside to come for markets such as nat gas. That's it for today. I hope it's been useful. Of course, we're in a new month. We're in the second half of the year. There's lots of change ahead of us. Certainly the big bill coming out of Washington's going to be a key part of that. The Middle East, everything that's shaping up in that perspective, and the direction of travel for interest rates. Some central banks drawing a line under their easing in the near future, and others yet to really ramp it up. And that does provide the basis for significant movements in the FX market. So plenty to sink our teeth into as traders. As ever, I hope this has been useful for you guys. My name is Joshua Mahony, Chief Market Analyst at Scope Markets. Have a great day and good luck trading for the month ahead.